But moving on to another set of more practical questions, and they're not many, Matthew, before we get on to Seritage and Daily Journal. So there was a point not that long ago where I remember you saying to me privately that you were not sure how long you could last like this. And suddenly it turned around, and it turned around because in a certain way, it felt like you knew that it was now or never. And I think that you did some things that I could learn from and have not yet learned from. And it had to do with the way you followed up with people who expressed interest. And so, what I've got written down here is the question, may I assume that you're not interested in investing in my fund? And perhaps you can tell me about how you learned to do follow-up with people who were qualified to invest with you, who ought to have invested with you. And it seems to me that you suddenly got a far greater success rate in attracting new investors.
Yeah, it's a really interesting situation. In fact, I had a incredible conversation and lunch with Arnold Vandenberg recently, and we were talking about this topic, and he was so excited because he thinks the shift was actually just in my subconscious mind. And so that's just an interesting observation that he had. He's, of course, very wise and wonderful human. But what I thought I did was a whole bunch of practical maneuvers, because I got to a point, and I will, really when I felt this was during the pandemic, very early in the pandemic, when markets were going down, and we have a similar fee structure to yours. So we don't get paid unless we are above high water marks and hurdle rates, and we earn a sliver of the performance. So to be kind of stuck in a financial trough, and then realized the fund's down, we were down at one point over 25%. I think the markets were down 30, Dow went down 37% or so. But then you've got to climb out of that hole. And that can take a year, two, maybe more. And that means you're not going to get paid for the next bit of time. So I actually talked to my wife quite a bit about it, about the situation we were in. And so you're asking some specific questions. I studied I had read a lot of sales books, because I realized there were people with less, I don't mean to say this in any sort of rude manner, but there are people with lesser capability, investment capability, that have far larger funds, enormous funds, but they have like a great sales team, or they themselves are charismatic individuals. And so one book that I really enjoyed was Never Split the Difference by Chris Voss. It's a very fun read, and there's a lot of great insights. And there's all the other books you would expect, like Cialdini's books and a whole bunch of others. So I read all of these, and I started kind of putting them in place, even things like Thinking Fast and Slow, and tried to come up with sort of a formula that I could use. And what I realized is, if I could create a better funnel so that people would come to me, it would work way better than me doing these one-on-one conversations, because it was extremely time intensive. And the referrals I was getting were not always great referrals. It would be, somebody's wealthy uncle who has no intention of investing in a fund, or somebody who's never invested in a fund before, doesn't even quite know what a hedge fund is. So it wasn't yielding great results. And so I fixed the funnel, or I tried to slowly start repairing the funnel. And then as people started coming to me, I was very quick to sort of let them know that I don't have the capacity to speak to everyone. And I would let the few that were very interested kind of come to the surface. And then if the conversation started to look like it was going nowhere, a really important question that I believe comes from Chris Voss's book is, can I assume you're not interested? Because it sort of puts some closure on it. And by doing that, you really get to know if somebody actually is interested, or if they're not interested. And if they're not interested, that's fine. But we don't need to dance around and waste time. And so it became much more efficient. And it was a very powerful, there's a number of things like that were very powerful.
You know, maybe just one more question on that front. And for the listeners' interest and viewers' interest, you know, the way it looks like to me is that at one point, not so long ago, you were at $5 million, and I think you even went down to $4 million, and now you're at $18 million, and $30 million is around the corner. And before you know it, you'll be at 300. And then when you get to $1 billion, I'll buy you a bottle or even a magnum of champagne, as I've promised you to do. But tell us about your funnel. What does your funnel look like? How do people come into the funnel? What are the different stages, and where do they end up?
It's a fun thing to share. I'm not sure if it will be relevant to all of the viewers here, but maybe it is, because I think it's relevant to a lot of businesses. I mean, we're running businesses, Guy, as you know. And so it's sort of, in our business, I think the naive view that people have is sort of, if I build it, they will come. And if I put up great returns, then everybody's going to come rushing in with their money trying to invest. And it's just simply not how it works. I have many brilliant friends who run funds, and a lot of them get stuck in the $3 to $5 million range for a long time. And a lot of them end up needing to go get other jobs and doing other things, because you need to do something a little different to break out of that. And Guy, you helped me figure out what this funnel would look like. A few others helped as well, but ultimately, I needed people to self-select themselves into my ecosystem, so that by the time I was having a conversation with them, they had already figured out that they wanted to be talking to me and potentially doing business together. So I sort of broke away with one tradition, which was like, never talk about your positions because of commitment and consistency bias. And I realized, like, what I need to talk about something. So let me go out there and share a few things. And I became quite a bit more transparent. I said, look, here's what we're doing. Here's what we know. I don't care anymore. And I went on a few podcasts. So the funnel for me started, there's a number of aspects going on in terms of like sending out annual reports and things like that, and trying to create really high quality work. But the podcast was a big catalyst when I could create like a many to one environment. And then the podcast hosts, it's actually their responsibility and goal to get as many viewers as they can. So if you're on a decent podcast, and there's a number of them, but if you're on a decent podcast, you get a few thousand views. And from that, people would go to my website. I used to not know who was going to my website, but I locked a few pages so that, and all we ask for on the website, if you want to see all sorts of research, all sorts of documents, all we ask for is your name and your email address. And if people aren't willing to put in their name and email address to get 10 years of research, write-ups, a trove of information, they're probably not ever going to invest. So that's okay. And that's totally fine. It's like, we don't need to waste each other's time. It's not going to work. It's fine. So the people that do put their name in, though, they become interesting. And I know we were just talking about this. For me, I use a software called GMass. It's free. Okay. It's not it's quite useful. In fact, I'm really pleased with it, but it's a really simple thing that basically just automates a few follow-ups. So I can create some very simple logic. If somebody responds, stop the follow-ups. If somebody doesn't respond after this amount of time, send them this email. And so I set up 3 emails. And you've all seen it in social media marketing and everything else. It looks very personal, but we try to make it really valuable. So here's a link. I don't know if you've seen this podcast. If you like that podcast, you might like this podcast. If you ever want to have a conversation, let's talk. And in each one, we're asking for a conversation. And most people don't respond to the first one. We start getting a few responses to the second one. But on the third one, we say, can I assume you're not interested in the fund? And we get like 20%. So these people have totally self-selected. They've gone from listening to a financial podcast, which is already an interesting person, to then looking up our website and then proceeding to enter their data into our website. And then when we write to them, they respond and they say they want to have a conversation. My close rate has gone from like 1% to 50 something percent. So out of the, let's say 50 people that visit and put in their information to the website, maybe I'll have a conversation with maybe 10 of them want to talk. A few of them are, we've actually set up some different pools of folks. Some people are really not able to invest in the fund. So we don't necessarily do a one-on-one call, but we do group calls to help all those people. And then, but some people are really interested. And when it comes down to the 4 or 5 conversations that I have, they've self-selected to the point that it's more like them deciding, do they want to join the $2 million class? Do they want to be in the exception class, which is 250 to 2 million? They might have a few questions, very specific questions. That's great. And we usually have one call, and they know they're either going to invest or not. Yeah. So that's been a major change.
Yeah, it's just really fascinating for me. I mean, many things come up from that. First of all, I think that for anyone building their business, there's a lot to learn, including myself. One is to think through that funnel and to think through how you're actually not qualifying people, but disqualifying people at different stages. Mm-hmm. This idea that when you we're the product of the internet, in that, am I using Google or is Google using me? Am I just a set of eyeballs that Google's trying to manipulate? But when we put our own content out there and when we behave in the right way, we can actually put the algorithm to our own use. And you've clearly put the algorithm with a carefully designed funnel such that those 5 people who you end up having conversations with are really worthwhile people to have conversations with. And it's just, and then, it's just fun to see that flywheeling emerging, because I'm sure there are other aspects to it that if one day you give a seminar on how to build your business, you might talk about what, because there are probably people who are not ready to invest, but in a year's time or 2 years' time are ready to invest. So you're kind of building the base of your pyramid, and you're now in a very, very different place. So it's not just the 18 million that you have today and growing, it's the enormous pool of people that you're building who are ready to invest. Maybe they weren't ready first time. In any case, thank you so much for that, Matthew.
Hey, it's great to see you here. If you enjoyed that video, I'm sure you're going to love this next one we put together. We'll see you there.